So the froth is definitely off the Canadian real estate market. Buyers finally have some negotiating power, and you may actually get a home under asking. So what does this mean for the overall real estate market? Well, in this video, we're going to look at a National Post article which is going to address the Canadian real estate market and where we stand today. And make sure you stay until the end, because despite all the craziness that's happened this year, what's happening with affordability and overall pricing is going to surprise you. So let's get to it. Hi everybody, my name is Connie Sarvanandan and I'm a real estate agent and investor here in Toronto and the GTA. And in this video, we're going to look at a National Post article that looks at overall what's happening with real estate across the board. So we're not just going to look at Toronto and the GTA, we're going to look at other markets as well. So let's get right to the article. Okay, so this is the article and it's called "The Froth is Off, Canadian Houses Now Selling at a $200,000 Discount." If this is one of your first times to my channel, I often pull up articles from different sources and go through them so that you can see what the article has to say, and then I give you my opinion, just so that you have some varying voices. And I try to switch up where the articles come from, and that is partly because one of my viewers said that they didn't like a certain source. So I love hearing feedback from the viewers. So if you have any feedback, good or bad, I'm happy to hear them and try and implement them in the videos. So this video, this article is "The Froth is Off," and it's saying the plunge is merely a correction of the Canadian real estate market that has long operated beyond any reasonable notion of economic fundamentals. I will try and link to this article below, but I've been having some issues because of copyright. But if you have to look it up yourself, it's from the National Post and that's the title. So let's get to the first paragraph. Okay, so the first paragraph is basically saying the Canadian housing market is going through something that would be unthinkable a few months ago, which is houses are actually selling at a discount to listing price. And then they give a few different examples across the country. So the first one is in Victoria, where there was a house listed for $2.25 million and it ended up selling for $1.93 million, which is a drop of $320,000. And in Halifax, there was one that sold at $140,000 below asking. And then in Toronto, you're seeing a lot of homes sell hundreds of thousands less. They give an example of Mississauga, where there was a home listed for 1.6 and after 2 months they sold for 1.38, and a 4-bedroom in Brampton that was listed at 1.8 and ultimately sold for 1.3 million. So basically what they're saying is what you used to see before in the height of the market, so in February, is that you'd see a list price and you'd see the prices go multiples over. Now you're seeing a list price and oftentimes you're seeing price reductions, or you're seeing it go significantly under. So that's the first paragraph. So the next paragraph is talking about sellers and saying that sellers are actually just rejecting lowball offers. And there's a phenomenon that's happening right now that in some Ontario markets, you're seeing a lot of delistings. And in some markets, you're actually seeing more delistings than you are actual sales. So what's a delisting? A delisting is somebody's listed their home for sale and then decided to take it off the market. Now, they could delist and put it back on the market, or they can delist and not put it back on the market. So you are seeing a lot of delistings. And the other thing that they're talking about is that sellers are still overestimating what they can get based on what's been happening for the last 2 years, and basically saying that every market across Canada, there was bidding wars and things were yielding up to 20% higher than the list price. And then the example that they give is Ottawa. So last September, the average list price was $524 and the average sold price was $670,000. So they listed it for $524,000 and sold for $670,000, which means that it was $146,000 over a list price. And then as recently as March in Toronto, you were seeing things that could go up to 500,000 over. So even though, the market is shifting, sellers have been used to this for 2 years, and some of them still have that expectation. So that's also starting to shift. If you're finding value in these videos, please like and subscribe. It really helps us out, and it lets me know what kind of content you're interested in seeing. And if you have any comments, good or bad, please write them below, because we love hearing from you. And if you have any real estate needs, feel free to call, text, email, or WhatsApp, and we'll be sure to take care of you. And finally, if you want to talk to me directly, I'm going to put my calendar link below. Okay, so the next paragraph is basically saying that this return to sold under asking is one of the obvious signals of a market that's moving into a decline. And the Royal Bank is saying that the home prices fell in June by 1.9%, and that is the largest ever 1 month decline. And that home prices are dropping faster and faster, particularly in Ontario and BC. And the biggest driver of this is really interest rates and going away from cheap debt. The overnight rate is now sitting at 2.5% after the big hike last week. So remember, throughout the pandemic, the Bank of Canada overnight rate, which really helps influence what the prime rate is, which is what our mortgages and other debt like lines of credit are based off of. The Bank of Canada rate was 0.25%, and now it's sitting at 2.5% after the 1% increase last week. So that's really had a big influence. Now, the Bank of Canada rate is not the only thing that affects the prime rate, but it definitely has influence. And then finally, this is probably the most important thing to note in this article, and I'm going to read it. Thus far, the plunge is merely a correction of the Canadian real estate market that has long operated beyond any reasonable notion of economic fundamentals. In the last 20 years, average Canadian real estate prices have risen 375% nationwide, a surge that has rendered home ownership unaffordable for millions of Canadians. So basically what they're saying is that So first of all, at the beginning of this year, we saw craziness in the prices going up. And, February was really the peak. March was really the peak. And now this correction is just kind of trying to mitigate some of the craziness that has happened, not only over the past 2 years, but across the board. And what they're saying is the last 20 years, a 375% increase over the last 20 years does not make housing affordable for millions of Canadians. So they're saying that they're supporting this correction because it's operated beyond reasonable notion of economic fundamentals. And the final part of the article is basically saying even with homes selling below asking, they're still selling a lot higher than what they were selling before in the past few years. So the example that they give is in Fredericton, New Brunswick, there was a home that sold for $720,000, which is just under the $725,000 asking price. But that same house sold in 2019 for $475,000, which is equivalent to the appreciation of $8,000 per month. And then in Toronto last month, the average home price stood at $1.15 million, which is a decline of $100,000 from just a couple of months ago at $1.25 million. But that $1.15 million is still 5.4% higher than it was last summer. So even though we're seeing decline in prices, the prices are still higher than a year ago. And I've said this before, with this article or any other article, you really need to look at all the numbers, because how you want to show the numbers can really, it can be really effective based on the article headline. So if you look at month over month, yes, there's definitely decline. If you look at year over year, there's still actually growth. So when you're reading an article, make sure you're looking at all those details to say what's actually happening in the marketplace. So to summarize, this national Post article, basically what they are saying is the frothiness in the Canadian marketplace is gone. So the excessiveness in the Canadian marketplace is gone, and buyers finally have some negotiating clout, which means that they can negotiate on price and get things for under asking, and they can also negotiate on other things like conditions or closing dates, things that would have been unheard of at the beginning of this year. The other thing that they're saying is that the corrections that we're seeing when it comes to pricing is really just that. It's a correction of some of the excess that we have seen. But if you look at it from a year-on-year standpoint, there's still growth. So month-over-month pricing has declined. Year-over-year pricing is still higher. And now, whether that continues for the rest of the year is to be determined, and nobody can really predict it. And that's the reason why is you can't predict the housing market. Nobody predicted COVID and what it did to the housing market. There's the war, there's all kinds of things that can affect the housing market, and that's why nobody can time it. If we could, then we'd all be rich. So it's keeping an eye on everything and really making sure that you understand it. So what am I telling my clients? Well, if they're sellers and all they have to do is sell, then I'm telling them the reality of what's happening now versus what was happening at the beginning of the year. I'm also letting them know that most likely they're still going to get more than they would have gotten last year. So that's what I'm telling sellers. If your sellers are also buying, then it can be a really good thing because they're selling for less, but they're also buying for less. And if they have a mortgage that they can port at a lower interest rate, then it could be a real win. So definitely opportunity there. And then finally, what am I telling my first-time buyers or my investors who are just buying? I'm telling them to watch the marketplace and understand the marketplace and work with me to make sure that they get all the information. So when I say all the information, I want them to look at the pricing of what's happening in 2022, but also what happened in 2021 and 2020, so that they have a history of what went up, what went down, how much it went up and down by, and if there is going to be market shifts and changes, what they can expect. Because understanding exactly what you're interested in will make it much easier to take advantage of an opportunity. The other thing is, if you aren't actively looking and keeping a track on that, you won't know when the opportunities come up. So it's really important you stay active, you understand what you want, and particularly if there's a community that you really want, you want to keep an eye on what's happening in that specific community. So that's it. If you have any questions about anything I said, feel free to reach out. I'm happy to answer them, and I'll put my calendar link below so that you have that information. Thanks for watching. I hope you found this video helpful, and if you have any comments, good or bad, we love hearing from you. So please put them below. Also, if this is your first time to the channel, please like and subscribe. I would really appreciate it. And if you have any real estate needs, feel free to call, text, email, or WhatsApp, and we'll be sure to take care of you. I'll also put my calendar link below so that you can talk to me directly. Thanks for watching, and I'll see you next time.